Hello, my name is Fan Yang, your technical analyst here at CMS Forex. It is Thursday, November 19, 2009, and you're watching today's video technical update. I'll follow up on the pound-dollar pair as it shows bearish signals. We'll also look at the euro-pound as it rallies after a breakout on the downside. Finally, we'll reassess the dollar-Canadian dollar and the New Zealand dollar-US dollar pair. This video is being prepared at about 6:45 p.m. Eastern, ahead of the Asian session. So first, let's take a look at the pound-dollar pair. In the daily, we see a bearish candlestick combination to start the week, and after that we saw another bearish candlestick. This is showing bearish signals confirmed by the stochastic divergence. However, the market is still creating higher lows and higher highs, so we're not establishing any downtrend yet, although the bearish signals are appearing in the daily time frame. Let's look at the 4-hour time frame. We see that the market is breaking or testing this previous support area. It broke this trend line, but only by a small amount. So right now the stochastic reading is suggesting that we may have a minor pullback. And if this does happen, we'll basically be retesting our previous power line here at 1.6750. And if that holds, we could have a swing projection that would target 1.65. Okay, so looking at the 1-hour time frame now, we confirm that a rally is indeed developing, as this very short-term trend line is broken, and there was a bullish divergence here, and the market and the stochastic reading is now crossing over the 50 area and into the bullish zone. So in the 1-hour time frame, we are seeing this rally develop. Therefore, we're gonna stalk this pair throughout the Asian European session to see if this 1.6750 area will hold. It doesn't have to reach all the way there, but if it does, that's where we would expect some resistance. From there, we can look for topping action, and if it holds, a decline can target, as we mentioned before, 1.65 area. Alright. Okay, so moving on to the euro-pound pair. The market continues to rally after breaking the 0.89 support on the downside. So this was a bearish signal, but the market continues to rally after that break. It couldn't really sustain a break below 0.8850. So now the market is rallying, and we expected a rally to the 89 area or the 89.50 area, but right now the market is continuing this rally. So it looks to be a more of a full retracement than just a simple minor pullback. So we expect this retracement. If we extend our first leg, we would expect this retracement to reach 0.90, 0.92, which is the 78.6% retracement level. From here, we look for topping action, and if the market is able to hold, then we would expect this downswing to reach 0.88. Now, our target was 0.87 before. If it would come from, if the market stopped this rally here, but since it's a more full retracement, we have to scale back that projection. Alright. Moving on to the New Zealand dollar pair. We see that we had our previous projection here to the 0.077 area. Now the market may still make that move, but this bearish candlestick is invalidating that outlook. It actually is a reversal signal. If you look here, this would be our adjusted outlook. So instead of a rally, we may have actually a decline from this point, and we wouldn't expect a significant decline because the markets are in a ranging mode. So we would actually, the scenario that this market is going to just range from between 0.73 and 0.75 is likely, but this bearish candlestick suggests that there would be the decline is actually aggressive, and this may actually extend the previous swing down to the 0.6950 area, and that would be between the 61.8 and 78.6% retracement area, which we would start looking for bullish signs here, since the market is still in a bullish mode. This would represent a very significant retracement, but unless this eventually holds as resistance, so if the 0.7 area, actually 0.71, but 0.7 area also, if this can hold as resistance, then the market would be in a bearish mode. But for now, it is in basically a neutral mode, in a ranging mode, and having an established uptrend already. At the end of this ranging mode, we would expect further continuation unless otherwise signaled. Alright, so we'll continue to stalk this pair as it possibly will develop a Gartley pattern or ABCD retracement pattern, and we'll go from there. The dollar Canadian dollar pair has reversed since giving a bearish signal here after breaking below 1.06. So this was the bearish signal, and then the market could not push the pair below 1.0420. Instead, it was ranging between that and 1.06 for a while, but this didn't invalidate our bearish outlook until the market today broke this trend line as well as the 1.06 area. So now it's coming back up here, and it invalidated our bearish outlook to target 1.02 down here, but we can still anticipate this to be a retracement because our peaks are still lower and lower, and if this one is stopped at, let me switch to the daily, if this one swings up and is stopped here, we're not in a bearish mode, but we are still in this medium term ranging mode. So preparing for that situation, if the market does swing up here, our target would be 1.0506. But another scenario is, since the market is showing more aggressive bearish swings than your bullish swings, the market may actually stop here, and if it does at the 1.08 area, maybe even slightly above it, if the market stops here and starts to decline, then we could have the target around 1.035 instead. Alright, because we would still have more aggressive bearish action, but if the market comes back up here, then we are back to the ranging mode. Alright, so that wraps it up for today's video technical update. Once again, I'm your technical analyst, Fan Yang. Remember to check out fxtimes.com regularly for your latest news and analysis in the Forex market.